Welcome. Myself T. Govindaraj, Assistant Professor in Commerce CA. Today I will discuss financial accounting. First, see what is financial accounting. Financial accounting is a specific branch of accounting involving a process of recording, summarizing, and reporting the myriad of transactions resulting from business operation over a period of time. These transactions are summarized in the preparation of financial statements, including the balance sheet, income statement, and cash flow statement that record the company's operating performance over a specific period. Next, golden rules. This is most important to the financial accounting. Okay. First of all, types of account. Types of account is three types: real account, personal account, nominal account. Okay. The golden rules for real account, personal account, nominal account. See, uh, real account, debit what comes into the business, credit what goes out from the business. See, listen, real account, debit what comes into the business, credit what goes out from the business. Personal account, debit the receiver, credit the giver. Okay. Nominal account, debit the personal or losses of the business, credit the income or gain of the business. See, debit the expenses or losses of the business, credit the income or gains of the business. Next, depreciation. Depreciation is nothing but decreasing the value from the assets. Okay. Depreciation. First one, depreciation ties the cost of using a tangible assets with the benefit gained over its useful life. Second one, there are many types of depreciation. See, there are many types of depreciation, including straight line and various forms of accelerated depreciation. Accelerated depreciation. Third one, accumulated depreciation refers to the sum of all depreciation recorded on an assets to a specific date. Fourth one, the carrying value of an assets on the balance sheet, it is its historical cost minus all accumulated depreciation. Fifth one, the carrying value of an assets after all depreciation has been taken is referred to as its salvage value. Okay. Depreciation is two types. First one is straight line method. Straight line method. Another name called fixed installment method. Okay. Second one is diminishing balance method. Okay. This is depreciation two types. Next, causes of depreciation. Why எதனால் டிப்ரிசியேஷன் வந்து உண்டாகுது அப்படிங்கிறத நம்ம பார்க்க போகிறோம் இப்போ. ஃபர்ஸ்ட், வியர் அண்டு டியர். ஓகே. வியர் அண்ட் டியர் ஃபார், அதாவது நம்ம இப்போ ஒரு பொருளை வந்து யூஸ் பண்ணுறதுனால வந்து ஃபஸ்ட்டு வந்து நமக்கு வந்து இது வந்து டிப்ரிசியேஷன் ஏற்படுது. ஓகேவா. வியர் அண்ட் டியர். லேப்ஸ் ஆஃப் டைம், நிறைய டைம் எடுத்துக்கிறதுனால அது ஒரு டிக்ரீஸ் ஆகுது. ஓகே. தேர்ட் ஒன், அப்சலன்ஸ். ஃபோர்த் ஒன், எக்ஸாப்ஷன். Fifth one, non-use. Sixth one, maintenance. Seventh one, market trend. Next, need for providing depreciation. First one, to ascertain correct profit or losses. Second one, to present a true and fair view of the financial position. Third one, to ascertain the real cost of production. Fourth one, to make provision for replacement of assets. Next, royalty. What is royalty? Royalty is nothing but royalty refers to the payment that is made to the owner of an asset or property for usage. Royalty enable another individual who is not the original creator of the property or assets to use the property in exchange for a payment or other terms. Generally, payments are made in the case where trademarks, copyrights, and patents are required by another individual. Royalty exists in different industries. Royalties have similar purpose where one individual owns the property and another has the license to use that property on stipulated terms. Next, single entry system. What is single entry system? First one, a single entry system of bookkeeping is where the transaction of the business affect only one account, that is only one account's value will decrease or increase based on the transaction amount. Under this system, a cash book is prepared that shows the payment and receipts of the cash transaction. Second one, under the single entry system of bookkeeping, the cash book and personal accounts of creditors and debtors are maintained and no other ledger is maintained. Every transaction of the business is recorded in the cash book without applying the principles of the double entry system of bookkeeping. The nominal accounts and real accounts are not recognized under this system. Single entry, most of the single entry is out of fashion. அதாவது சிங்கிள் என்ட்ரி சிஸ்டம்ங்கிறது வந்து சின்ன சின்ன ஸ்மால் இந்த பெட்டிக்கடை அந்த மாதிரி யூஸ் பண்ணுறவங்க மட்டும் தான் சிங்கிள் என்ட்ரி யூஸ் பண்ணுவாங்க. பெருசாக நமக்கு வந்து எதுவும் தெரிஞ்சுக்க தேவை, அதாவது ப்ராஃபிட் ஈஸியாக கால்குலேஷன் பண்ணுறதுக்கு வந்து சிங்கிள் என்ட்ரி தான் யூஸ் பண்ணுவாங்க. ஓகேவா? மோஸ்ட் ஆஃப் தி ஃபேர்ம்ஸில் வந்து டபுள் என்ட்ரி சிஸ்டம் தான் யூஸ் பண்ணுறாங்க. ஏன்னா அப்போ தான் நம்மளால் ட்ரூவான ஒரு ப்ராஃபிட் அண்ட் லாஸஸாக நம்மளால் தெரிஞ்சிக்க முடியும். ஓகே, நெக்ஸ்ட், features of single entry system. First one, original vouchers. Second one, cash book. Third one, personal account. Fourth one, no fixed rules. Fifth one, estimation of profit or loss. Sixth one, final accounts. Next, distinction between single entry and double entry. First, single entry பார்த்தோன்னா a single entry system is a bookkeeping system in which only one part of the transaction is recorded, such as debit or credit. இப்போ double entry, a double entry system is a mention of recording transaction in which both sides of a transaction are recorded. இப்போ single entry, this sort of bookkeeping is not for tax purposes. To put it another way, it is not accepted by the tax authorities. Double entry. This method of bookkeeping is acceptable for tax purposes. To put it another way, this method is accepted by the tax authorities. Single entry. If you use a single entry bookkeeping system, you won't be able to prepare a trial balance. Double entry. In the case of double entry bookkeeping system, a trial balance can be prepared. Uh, Next, singulatory. This system is only appropriate for small business. Already I telling, this is for small business. Double entry. It is appropriate for any business. Next, branch accounting. What is branch accounting? Branch accounting is nothing but is a bookkeeping system in which separate accounts are maintained for each branch or operating location of an organization, typically found in geographically dispersed corporations, multinationals, and chain operators. It allows for greater transparency in the transactions, cash flows, and overall financial position and performance of each branch. Second one, branch accounts can also refer to records individually produced to show the performance of different locations, with the accounting records actually maintained at the corporate headquarters. However, branch accounting usually refers to branches keeping their own books and later sending them into the head office to be combined with those of other units. Next, methods of branch accounting. First one is debtors method. Second one, stock and debtor system. Third one, final account method. Fourth one, wholesale branches method. Fifth one, income statement system. Next, departmental accounts. What is departmental account? Departmental account is an accounting system used by organization to manage the accounts of their various departments in separate books. That is, for every department separate trial balance and profit and loss account is prepared, and at the end of the year balances of each department gets transferred to general profit and loss account, prepared to find out the profitability of a firm as a whole. Next, advantages of departmental accounting. First one, evaluating of performance. Second one, growth potential of each department. Third one, justification of capital outlay. Fourth one, judgment of efficiency. Fifth one, planning and control. Next, hire purchase system. What is hire purchase system? Hire purchase system is nothing but hire purchase is an agreement for buying expensive consumer goods where the buyer makes an initial down payment and pays the balance plus interest in installments. The term hire purchase is commonly used in the United Kingdom, and it's more commonly known as an installment plan in the United States. However, can be difference between the two. With some installment plans, the buyer gets the ownership rights as soon as the contract is signed with the seller. With hire purchase agreements, the ownership of the merchandise is not officially transferred to the buyer until all payments have been made. Thank you for my thank you.